10 years from now, we might look back and realize that the biggest bubble of the 21st century wasn't crypto, wasn't real estate, but AI itself. Right now, the world is caught in a technological fever where everyone believes AI will transform every industry, from healthcare and education to finance and everyday life. Companies won't stop talking about AI. The media keeps hyping it, and investors are throwing money at anything with the letters A and I slapped on it. But if you look beneath the surface, at how the money flows, how the narratives are built, and how the market reacts, you'll notice something familiar. AI is following the exact same pattern every major bubble in history has followed. It starts with doubt, then comes the perfect story, then the flood of speculative capital, the swelling valuations, and finally the painful awakening. This cycle is played out with the railroads in the 1800s, with electric utilities in the early 1900s, with telecom in 2001, and with the dot-com boom in 2000. And AI today is speeding through that same cycle, faster and more aggressively than all the previous ones combined. When AI first arrived, most people thought it was just a tool to answer questions or make funny images. But in a very short time, people started crafting a flawless narrative around it. That AI will boost productivity, automate everything, cut costs, and open a brand new technological era. And once a story becomes beautiful enough and gets repeated enough, it turns into a drug for the market. Money starts flowing in without anyone asking whether the value is real. A tiny AI startup can raise hundreds of millions with nothing but a prototype. Big tech companies pour tens of billions into new data centers. Stocks connected to AI hit new highs based on nothing more than a press release or a spending commitment. The market is pricing AI as if it's going to be fully deployed across the entire global economy tomorrow, while in reality 95% of businesses are still experimenting, still struggling, and still not seeing real profit from AI. And behind the spotlight, there's a very sophisticated financial loop at play. A loop where money is passed around between the giants to create the illusion of massive demand. A chip maker invests billions into an AI company. That AI company then commits to buying tens of billions worth of chips in the future. A cloud provider jumps in, investing more money in exchange for exclusive rights to the AI model. Then comes the headline, Company X to spend $50 billion a year on AI infrastructure. Or AI firm commits $60 billion annually on cloud services. The media blasts it everywhere. Investors FOMO, stocks surge, market caps jump by tens of billions in a single afternoon. But the most important question, the one almost nobody wants to ask, is this: where is all this money actually coming from? Because the real revenue these AI companies generate today is tiny, just a few billion at best. Most of the giant spending numbers are not coming from real customers. They're coming from a loop of investments, commitments, buybacks, reinvestments, and valuation boosts. It looks amazing on paper, but the underlying business support isn't strong enough to survive a major market downturn. And this isn't a new trick. During the dot-com bubble, internet companies created revenue by giving money to startups that would then spend that money on advertising with the same internet companies. In the telecom bubble, tens of billions were poured into fiber optic infrastructure that 90% of the country never used. Dark fiber sitting idle for years. In the railroad boom of the 1800s, people built tracks to places that had no population and no demand. The technology was real, but thousands of companies still went bankrupt. And that's the dangerous part. The technology can be world-changing. Yet the companies building it don't always survive. AI might truly be the next revolution. But the way money is circulating, the way expectations are being inflated, and the way valuations are running far ahead of real value. All of this suggests that we're walking very close to the peak of a bubble no one wants to admit, but the story gets even more uncomfortable when you look at how concentrated the entire AI ecosystem is becoming. A handful of companies control the chips, the cloud, and the models, and they're optimizing everything exclusively for each other. It creates a kind of soft monopoly that doesn't need illegal collusion. All it needs is alignment. When one company builds chips specifically tuned for one model, and that model is optimized specifically for that chip, everyone else is left outside the gate. Competitors can't catch up because the entire stack, hardware, software, infrastructure, training, is locked into a closed loop controlled by just a few players. We've seen this before too. In the past, the Wintel Alliance, Windows plus Intel, dominated the PC world for decades. Even when other chip makers had good technology, they couldn't break in because everything was optimized for a Windows Intel world. AI is shaping up to be the same, except the stakes are much higher. This isn't just about running your computer faster. This is about the system that could end up powering everything. Your car, your job, your home, your communication, your entertainment, every layer of everyday life might soon depend on one or two AI platforms. And when the power of technology becomes that centralized, the consequences, economic, political, and even social, can be enormous. And there's another problem no one wants to talk about. The gap between the AI dreams being sold and the actual real-world usage is massive. Big corporations around the world are proudly announcing that they're all in on AI. They're signing contracts, buying access, and installing tools for thousands of employees. But when researchers looked deeper, they found that roughly none of C. This creates a dangerous disconnect. The money being spent on AI is real, but the productivity gains are still theoretical. It's exactly the kind of mismatch that inflated the dot-com bubble. Back then, companies spent billions building websites, intranets, and online tools that barely anyone used. The spending was real. The results weren't. And when the illusion finally broke, the crash was brutal. Some analysts are starting to argue that AI models themselves are entering a phase of commoditization. A year ago, every model felt different. One was creative, one was logical, one was funny, one was fast. But today, they're all starting to look the same, perform the same, and blur into one another. When a technology becomes a commodity, companies can no longer justify sky-high valuations based on unique capabilities. They have to compete on price, user interface, ecosystem, and customer service. And once AI becomes a commodity, the question becomes, what exactly are investors paying for? If the models converge, the advantage shifts back to whoever controls the hardware, the data centers, or the distribution channels, not the models themselves. And that leads to one of the scariest parts of this entire story. The megaprojects. Some AI companies today are committing to spending hundreds of billions, trillions of dollars on future infrastructure. They talk about building the world's biggest data centers and training the world's most advanced models. But here's the catch. The only way to afford that is by either taking on massive debt or rushing into the stock market with the biggest IPOs in history. If everything goes perfectly, if the revenue catches up, if adoption explodes, if the technology grows exactly as predicted, then these giant bets could pay off. But if the timing is even slightly off, if the economy slows down, if investors lose patience, or if regulatory pressure comes down, then the companies spending aggressively today could face a financier. We've seen both sides of this story. Amazon survived because even when it wasn't profitable, it had real customers and real revenue. But countless other tech companies from the dot-com era, companies that looked unstoppable, collapsed the moment the funding dried up. The question hovering over the entire AI world right now is simple. Which side of that story will repeat? Will AI be the next Amazon or the next web van? Will today's AI giants dominate the next 50 years or disappear the moment the market stops believing the hype? What comes next might depend on which of several possible scenarios becomes reality. In one scenario, the market corrects naturally. The bubble pops, valuations drop 50 to 70%, weaker companies die, stronger ones survive, and the industry grows healthier afterward. Painful but manageable. In another scenario, AI companies use their inflated stock prices to buy real traditional businesses, trading imaginary value for tangible assets. If that happens, the risk doesn't disappear. It simply gets transferred to the companies being acquired. There's also a geopolitical scenario. If the AI bubble bursts at the wrong moment, it could weaken the world's biggest economies and open the door for more global instability. And in the darkest scenario, economic collapse could trigger political chaos, leading to constitutional crises, authoritarian leaders, or fragmentation within countries. History has shown us that big bubbles don't just destroy money, they reshape societies. But maybe the most important thing to remember is this. Bubbles don't form because people are stupid. They form because people believe. They believe in progress. They believe in innovation. They believe that this time, finally, the future is within reach. And in many ways, those beliefs aren't wrong. AI will change the world. It already is. But history reminds us that a world-changing technology and a financially stable industry are not the same thing. You can have the greatest invention humanity has ever seen and still watch dozens, even hundreds of companies collapse, while that invention slowly becomes a part of everyday life. The real danger of the AI boom isn't that the technology will fail. It's that expectations will inflate far faster than reality can deliver. And when expectations run ahead of reality, the crash always comes, slow at first, and then all at once. The smartest people, the biggest companies, the loudest headlines, they all convince each other that the numbers make sense, that the growth will arrive, that the spending is justified. Until suddenly it isn't. And when the wave finally breaks, it doesn't matter how optimistic the story sounded, only the fundamentals remain. That's how every major bubble in history ended, not with a lack of vision, but with a lack of time. Not because the ideas were wrong, but because the money couldn't wait for the ideas to mature. So the question isn't whether AI will transform the world. It will. The real question is, will the current AI industry survive long enough to see that future? Or will it become another chapter in the long, painful history of bubbles that were built on truth, but destroyed by timing? And maybe the most important question of all is this. Do you think we're still climbing? Or are we already standing on the edge of the peak?